So here we go, Mobico stock. We're going to talk about it today. Is it back? Is this stock about to kick it back into life? It's been a tough time for Mobico stock over the last kind of 18 months, and today we're going to talk about what is going on with Mobico stock, and is the bottom in, and is this stock going to now go on to rally. Now there's a couple of points that I want to clear up actually before we do get onto the video. First of all, apologies that this video wasn't yesterday. I had basically already recorded the SoFi video, edited it, and I was like, well, that's going up, and then I'll do the Mobico video. And I didn't really have time to film and edit yesterday. I'm currently helping someone in the family put a new roof on the house. So if I don't turn up for tomorrow's video, you know that me being on the roof hasn't gone that well. So if I disappear, that's what's going on at the moment. But as well as that, apologies as well for the comment section. I've not had time to sort it out yesterday, but I don't know what happened to the comment section yesterday, but I saw like a big surge in like comments. I was like, what's going on here? And yeah, there's like some sort of big spam bot that's gone into the comment section of yesterday's video. So I'll sort that out and try and make sure that that doesn't happen again. It's hard to do when you're not on your phone or your mobile because you're out. But yeah, it's Mobico. You know, what a day yesterday. Stock absolutely flying up. And what surprised me as well is the reaction. You know, it always makes me laugh when you have a stock that does that big reaction on the share price, and it's just so chilled. Like, I was expecting, like, even on the Discord, it was very quiet, and in the YouTube comments, it was very quiet. And I was like, wow, like 17% jump. It makes me laugh because everyone's all right with a 17% jump. Everyone's like, yeah, it's all right. But as soon as like it's the other way around, it's amazing what a difference between a green jump and a red jump or red jump down makes. You know, if it was a 17% jump down, I mean, the panic that would have been there around Mobico stock would be like, oh, what's happening? What's happening in comment section? Even the trolls would have been flying into the comment section like, Mobico's down 17%. And it's crazy that how much a stock is judged on the share price, and if it's up, oh, it's the best thing, or if it's down, it's the worst thing. And it's still, as much as I try preach on the channel about not getting caught on the share price, you know, look at the financials, it still to this day is amazing how much a share price reaction will judge everyone's opinion on that stock. And like I said, if Mobico was down 17%, the fear that would have been around there would have been absolutely insane. And it actually reminded me of a stock like InMode. InMode is a stock that in the last 12 months I've had a million comments on, and I'm like, why am I getting so many comments on InMode? Because I've not had any comments on InMode for like the last 4 years I've owned it, and all of a sudden I've got these comments about, what about InMode? What's going on with InMode? Oh, InMode's down, it's a trash pick. And it's like, well, how has that happened in the last 12 months? Well, the stock price is down. And it's like, well, actually, let's look at the financials of the company, and this is not supposed to be an InMode video, so apologise for this little talk about it for a minute, but you know, you look at the financials of InMode, you've still got a company that's throwing off like nearly 10% of its market cap in profit every year. You've still got a company that's got like crazy amounts of money on its balance sheet, and it's going through its toughest time. You know, when you're at a company that sells like whatever it is, the products, is it like the product costs like £1 million or 300,000, and most of those products are paid on finance, and your finance costs go from like free interest up to like the highest it's ever gone in like the last kind of 15 years. And then all of a sudden, like, well, why is InMode not doing well? Why is the share? And it's crazy, like, people just judge a stock, and like, rather than going, okay, that stock's down, could it be an opportunity to get a quality business that's a bit sold off here? It's amazing how low, and the fact that how low fear pushes prices down is crazy. And I think yesterday was a prime example, like the difference between Mobico being up 17% and it's all like, yeah, it's, you know, it's whatever. But when Mobico was down 17%, the fear that would have been out there, and it's still trying to get the message across to people like around share prices. You know, the big thing is to look at the financials. So saying that, let's get stuck on some of these financials here. So apologies for that little talk, but we're going to get on some Mobico, formerly known as the National Express. They changed the name. Stock was up 17%. However, I'm just recording this as the market opens up. So at any point, there you go. It might change in share price. Yeah, I prepared this video at 7 AM and I'm filming at 8 AM for you guys. That's what we go to on this channel. But yeah, I mean, it's been a tough time, hasn't it, really, in the last kind of couple of years for Mobico. It historically was a company that actually did quite well, as you can see here. Had the CV drop, I bought in, stock rallied up over 100%. But since then, the stock has gone back down, and I was selling some profit out over 100%. But since then, the stock has gone back down to its COVID lows, and actually it's gone a little bit lower than its COVID lows, which kind of points you out to how low this stock has kind of fallen in the last kind of few years. It's had a big drop, as you can see here. So yeah, it's been a tough time really for the last kind of couple of years, and it's kind of looks like it's had that bit of a bottom out in the last kind of 6 months. And it's in really since like June time, 2024, it's had a bit of a bounce up. The stock is over 45% up. Now, I'm going to point this out because this was a little bit frustrating yesterday. I don't know if any of you guys saw, yeah, it's still here. So we've still got the stock chart, I think, from yesterday. Yeah, and the really frustrating thing is the stock actually opened up negative yesterday. And then it went on to jump up 17%. That was really annoying. I can't believe it. I read the report at 7 a.m. when it came out. And I was like, yeah, that's good. Stock will be up about 10% today. And the fact it opened up negative, I was like, how was this happen? And it was negative by a little bit as well. And I was like, you know, you start looking, there's sometimes where you don't want to start saying, that's a little bit suspicious. It's a little bit on the you know, the short seller protection side. Like, how are the shorts getting out here at negative? And then the stock rallies up. You know, I don't want to say it's sometimes the stock market's a little bit fixed, but I thought yesterday that was a really suspicious move on the open. Don't be throwing accusations around there, but that was very suspicious to me. But obviously a really good day. And now can the stock really start kicking on? Well, there's also something else that we're going to talk about is obviously this article that came out. This caused a bit of a stir as well, which was talking about Mobico and potentially selling it to North America school business, which we know they wanted to do, but the figures that they put also caused a bit of a stir as well, I noticed the other day. Now, let's go back a bit. So Mobico, previously pretty good business. It's consistently grew. It had very good profit margins, as you can see here. Decent profit margins. The company carried on growing revenue at good rates, winning contracts. Revenue was pretty consistently going up. You know, 82 million, 106 million, 112 million, 137 million. Right before COVID, 141 million. So the company has historically done quite well. Okay, obviously COVID happened. People weren't taking the buses. And then the travel started coming back, and obviously they started getting towards the profitability side of it, and then boom, 2022 happened, and what happened with Mobico is they got hit by a few things. They got there was a few helping like credits, funds that they were getting from the government after COVID. They went. You also had obviously the Ukraine situation, and obviously when you're at Mobico, which is a transportation company, your fuel costs went sky high. That didn't help. You had wage inflation. Obviously they employ a lot of people. Wage inflation killed them, and then also on top of that they haven't got the best balance sheet, and the higher interest rates and having debt at higher costs, that also killed them. So you had all these factors that kind of killed the profitability off, and even though the revenue is now higher and continues to grow at very good rates above the old COVID situation, the profitability hasn't followed, and that's why the stock hasn't done that well. So we want to see the profitability get back up to the kind of 3-4-5% range, and then the company will do very well, in my opinion. Can it get there? We'll see. It struggled last year to do it. However, it's trying to put a few more costs in place, like cost reductions and increasing the fares to try and cover that to get back up to profitability. That's the big thing that we want to see them do. Now, obviously, the big red flag that we have with the Mobico, unfortunately, is the balance sheet. The debt has, from the last kind of couple of years, increased, and obviously getting this debt at higher interest rate costs is currently killing the business. They do sit on some cash though. As you can see, they do sit on 356 million of cash, which is still a healthy amount of cash that can help them go in. You know, the thing is that what we have at the moment is Mobico went down to basically a bankruptcy price at 419 million. It was starting to get priced at bankruptcy levels, even though realistically, yeah, the balance sheet is ugly and it is currently loss making, although it probably won't be by the end of the year. It started to get put down to, you know, bankruptcy levels, and if they start getting onto the levels of profitability that analysts are forecasting, they're expecting 38 million this year, 79 million next year, 93 million next year. If they do start getting onto those levels of, you know, profitability, then obviously when you're talking about, even if they get to 40 million this year, it's on a 419 million market cap. Yeah, it starts looking quite cheap, doesn't it? And if it gets to 80 million profitability the year after, 80 million on a 419 million market cap, yeah, that's where it starts looking quite attractive. And it's, if it can start getting up to that levels of profitability, is the key thing that we're kind of looking at. So they put out the 6 months report. I've not listened to the webcast yet. I will do that, but I haven't had time to do it because obviously I've been on a roof. But at some point I'll try to go through the webcast and see what they say on the webcast, because there's normally some good information on there. But looking at some key points here is that the continued revenue growth and passenger growth. So The company's still growing, and we know there's not an issue with the demand. The revenue growth is still good, passenger growth is still good. The big thing is ramping up the profitability. So they want to get to an operating profit guidance of 185 to 205 million, which was last year's guidance. They didn't manage to get there though, and that's what we want to see them do this year. Because if they start getting to that sort of level, let's say they do, for easy math's sake, let's say 200 million in operating profit, and you're a 419 million market cap, what you're going to be around about 3 times EBITDA. It's that's what we want to see happen. Now the big thing is that they say is they're going to sell. We've seen this for a while. They're on about selling off the North America school business, or the school bus business. That's going to be a key part of the business if they do sell that off, and that goes back to this article here, which we'll touch on at the end of the video. But group revenue, once again, strong, 5.6% on an FX neutral basis. Very, very good. EBITDA was up 13%. Operating profit was up 28%. They did get to 71 million of adjusted operating profit. So they're getting closer to that target. Lazy maths will tell you they're still a little bit off there at 142 million, what we talked about a little bit earlier. But hopefully what they're going to see in the back end of the year is that's the busiest period. That's when most people travel during summer, the kind of Christmas period. Also, during that point of view, they've got more cost savings to come in, and also they've got a few increased prices. I think they're also increasing the prices on the UK business, and so that hopefully will drive the company to fill that extra 40 to 60 million that's currently missing off the operating guidance for the end of the year. So it looks like they potentially could be on for the target this year, which is good, and you can see that was up 28%. So all the numbers are moving in the right direction. Now this is where it gets a little bit ugly when you start looking at the proper numbers. So operating profit, as you can see here, but there was a group loss before tax. It's basically break even now, which is good. So there was a big improvement, as you can see here. But the problem is that what happens is the debt. The debt is absolutely killing the business, because when they pay the finance costs off, that's what puts them into a loss. And you can see here that the debt has gone up by 87 million. Once again, there's a lot of debt on the balance sheet that we just talked about, and every time they have to refinance the debt on the balance sheet, especially at the moment, a lot of that's coming out of like 2-3% interest rates up to 4, 5, 6, 7. So that's why the debt is going up on that point of view, and that's why it's key to pay the debt off. That's why it's key to have a company that has no debt and a good balance sheet. And that's one thing that really surprised me, is like I wasn't expecting, when I bought this stock, I wasn't expecting the world to do what it did and interest rates to go this high. You probably should have done, but you don't realistically. You maybe expect it to go 3-4%. I don't think we expect it to go up the fastest ever, and that's definitely hurt the business, and that's why it's key for them to kind of get the debt paid down on the business. They talked about the guidance, and said again about cost inflations and managing it as well, and also the cost cutting that they've got going on at the moment. Dividend wise, I mean, I remember when they said they were going to bring the dividend back, and I made a video on it, and I was like, why are you bringing the dividend back? Pay down the debt. That is the key thing. And then obviously the management must have got in one morning, put the JKR investing on the board meeting and gone, this guy says we should probably cancel the dividend and pay down debt. Maybe we should do that. And then that's what they did. So they listened to me, and then I'm joking. They didn't listen to me, but it was the most obvious thing to do, is like, don't start paying a dividend yet. Make sure you've got that debt down. You haven't got your profitability up. And they have said that, they're not going to pay a dividend, which is the right thing. Do not pay a dividend until the balance sheet is clean, in my opinion, or at least get the debt down to like 30% debt to equity, and then pay a dividend. That's where I would expect them at least to probably be about. So yeah, they're doing the right thing there. So well done to the management team at last. More contract wins, which is really good. Obviously they won more contracts, which is key. They're always winning contracts. Looking at the parts of the business, ALSA continues to do very well. Obviously that's like the business in like Portugal and Spain and everything. Still doing very well, as you can see here. North America, probably one of the better numbers that we've seen for a while. Obviously there's been a lot of impacts with the driver impacts, school runs, the COVID issue, a little bit of growth coming in there again. UK still did well. German Rail, I can't remember what they gave a reason on the report, and I forgot what it was, but that was down slightly, but it's the smallest part of the business, or a very new part of the business as well. Looking at the operating profit wise, ALSA still continues to be a really good driver. Look at that. North America still doing that had a big rebound, as you can see here. UK was a little bit weaker, but they're saying that I believe I read somewhere that they can get that to actual operating profit by the end of the year with the price increases that are going to come in I think they came in about in July. German Rail as well, the same again, the impact that I talked about there, and then And you can see here at the bottom, you know, the operating margin starting to improve, which is what we want to see. Now, the big thing is that obviously the balance sheet. Obviously, the company's still growing. All the inside the business is starting to move into the right direction, and hopefully, if we look at the company now, I mean, if they do deliver on the target of operating profit of around about, you know, let's call it 200 million, we can see here that normally the company is making around about a operating profit of 71 million. So it takes them about 70 million in financing costs every year. So if they do get to the goal of 200 million in operating profit, the company's probably going to make around about 40 million, I would say, 40 to 50 million in profit this year. 40 to 50 million on a 419 market cap would be very good. And I think if they do hit the targets that they're doing, the stock should do quite well from here. And I think that obviously that's why we've had the jump yesterday. Everyone's kind of like ran the numbers. What's the stock doing this morning? It's had another jump up. So I think everyone kind of ran the numbers and they went, hold on, if they do these numbers, this stock is actually, you know, priced at bankruptcy level, and it could actually be a very cheap opportunity. Obviously, you still got the risk with the balance sheet there. So it's kind of weighing up, you know, it's got that risk with the balance sheet, but if they do the numbers they say they're going to do, it's going to look very cheap here. And that's why a few people jumped into the stock. And I believe as well, like, if they do these numbers, this stock will be above 80p by the end of the year. It could be probably even higher than that, and it will really start kicking on, and everybody will go, I wish I bought the stock at 45p when it was there, 4 or 5 months ago. So if they do that, it'll look very good. Now, the big thing is that obviously the big headwind that you have with this company is the cost of the business. The cost of the business of the debt is weighing it down, because if it wasn't for the debt, obviously a lot of that operating profit would be profit. You know, if you had a company here that was doing 200 million in profit every year, that would be a lot higher than what they were doing even before the COVID stuff. Before the COVID stuff, the company was doing, what was it doing? 140 million in profitability. That would be more in line with what they were used to be doing. You know, on a profit margin basis, you know, 200 million would be insane profitability. This stock, if the company were doing 200 million profitability, you know, the company would be valued 3-4 billion. But obviously it's got the finance cost, the debt cost, so they need to pay down this debt. Now, the other thing that is being suggested, well, it isn't being suggested, it is happening, is the company's looking to sell off its North America school business, which we saw here is still a pretty big part of the business. Obviously, you look here, 609 million-ish. The profitability-wise, is a profitable business. They're looking to sell that off, which has been a hard business for them to do. It's a fragmented market. The labour costs are being very hard for them to do, and obviously, you know, it's not ideal. But when you've got a company that's got a lot of debt, you know, what can you do? You can sell off a part of your business, sort out your balance sheet, and you sell off one of your part of businesses that maybe you don't really want. And that's what, you know, Mobico are looking to do with that part of the business, is, you know, kind of sell that off. Now, the question is what they're going to get for it, because it's currently looking like it could be sold off by the end of this year, and what they're going to get for it. And now, this is the big thing where I talked about this year at the start of the video, this Financial Times video. Article, sorry. They talked about what they could potentially get for it. Now, obviously, there's a few things you can look at. First Group sold off theirs in 2021 for 3.3 billion, but that was the largest participant. 3.3 billion is even a mega amounts extra than the market cap. Big multiple on what it's currently trading at. But this article here expected that it could be sold if they use the same EV to EBITDA multiples that was sold for. They could get for 1.1 billion using 2025 estimates. Now, that's where it was a little bit like, well, hold on, you know, that's 2 times the current market cap. It was, and everybody was like, hold on, you're getting, you know, 2 billion. 2 times the market cap. How much is the rest of the business worth? And also, that would clear nearly all the balance sheet out. I don't think they'll get that for the business. I personally think they'll get somewhere around about 500 million for that, which is still crazy, because, you know, you look at the market cap here and it's still more than the market cap. But I would expect somewhere between like 400-500 million for the business. And you got to remember, that's why we're saying that Mobico is probably valued at like bankruptcy levels, because of how low it is, where we talk about one part of the business is being sold off for nearly the whole of the market cap. In fact, it actually points out to why nobody comes in and actually probably takes out Mobico Group, because it's a good valuation for the business. But that's what I would expect. And then obviously, you might say, well, that's going to have selling the business off would have an impact on the revenue. It would have impact on the profitability? Yeah, I mean, obviously you'd take 600 million out of the business, and obviously you'd take a bit of profitability out of the business. But the problem, the long-term thing is that obviously this has been a big headache for the company at some points with the driver shortages. But what you take out in operating profit, and then what you'd pay off in debt, you know, the high interest debt that you'd be able to pay off probably would equal out, balance out, and if anything, even more, would put those debt costs down, where the debt interest is that high, it's more than what you would even make on the American business. So it would actually probably be a benefit, even though you'd see the numbers come out, it would improve the numbers in the long term, because it would pay off all that high interest debt, and the share price probably do even better from that point of view. So that's the wild card, is like, what can they get for that business? And I would say that the aim is to get 400-500 million. And if you get 400-500 million, pay down nearly half that debt, you'll be in a very good place. And so that's the big thing with Mobico Group now. It's I think the bottom's in on the stock. I think we're heading towards 80p, especially if they do those numbers. And then the wild card we have here is that, can they get to these profit margins? And then obviously the American school business, if the school bus business, they sell that off, you know, strengthen the balance sheet, get those debt interests down. Yeah, it'd be really interesting to see where Mobico does get to. And I think that we could potentially see the bottom here. Obviously there's still the rest with the balance sheet here, but it should start to kick on now, which is really good, because it's been a bit of a painful time holding Mobico over the last few months, and it's been one of those that it's one of the ones that's being battered in the comment section, like, Mobico, you know, like this. And that's why I say, you know, people count it as a big loss, and I'm like, you know, it's a paper loss at the moment, guys. You know, don't count it out until it's gone. You know, stocks can be volatile, it can turn around, and I think that potentially it's one of those that I think a few people might be a little bit, if you manage to get some shares at, like, you know, that 45p range, you might be laughing a little bit here today anyway. So yeah, that's the video today, guys, on Mobico. I think we are at the bottom, guys, and I think hopefully we have a good year. We'll see what happens. Let's hope they hit the profit targets and nothing crazy happens, and let's see what that American school business does when it's sold off. So yeah, thanks for watching, guys. See you in a bit.